What's changed from yesterday that would be accounted for in the way the market is going to heavens today? And it has to be one thing, and that is the affirmation by the head of the GSA that the transition is underway, and the president seems to be stepping back from such a combative stance.
Yeah, that's right, Ty, and good to see you. I think it's absolutely correct that the market is reacting very positively to the news that we are finally moving on in this transition process officially. Both the GSA news, as you mentioned, states certifying election results, Pennsylvania and elsewhere. So this fear that we would have a protracted legal battle, that it would get ugly, that we would be uncertain about who was going to take the oath of office on January 20th, that's all gone away. And who knows? President Donald Trump may tweet later that he's still fighting, all the rest of it. Some of that is just politics for the Georgia runoffs, but we are moving on. And as you mentioned, Biden is starting to fill out his cabinet. A lot of these picks are very safe. Market likes them and is hoping for these vaccines to come through in the spring. The question is, as your last guest was talking about, can we nurse the economy from where we are now to when we get the vaccines? But I think you're absolutely right. One of the big pieces of this tremendous rally over 30,000 is the fact that the presidential race is finally officially over, and Joe Biden will take office in January. So we don't have to worry about that anymore.
Let's pivot before we come back to the cabinet picks. Let's pivot to the economy. We're going to get a GDP number tomorrow, which may look reasonably good, but an awful lot of people are looking ahead to the first quarter of 2021 and saying, "What? Look out below! The wheels may come off a little bit there." It's pretty much agreed that we need more stimulus. That sure does not look like it's coming before the end of this year. It looks like it won't probably come until Biden takes office, and it'll be smaller when it does.
Yeah, that's exactly right. I mean, I think, the GDP print tomorrow will be significantly smaller, obviously, than the third quarter when we got the bounce back. And then, as Michael Feroli was saying earlier, could be a negative print in the first quarter of next year. And that is all largely a result of stimulus coming out of the system, these unemployment benefits expiring, no aid to state and local governments. So you get layoffs there, job growth slowing, and we have big COVID spikes. That's why I'm saying we have to get from where we are now to where we want to be in the spring when the vaccines arrive. And part of that is stimulus. And you are correct when you say it's going to take a while. We're not going to get it in the lame duck. There's no chance of that happening. Pretty likely Republicans hold the Senate, win both those races in Georgia. So Biden comes in, would like to do $2 to $3 trillion in stimulus. He'll be lucky to get half of that, maybe even less. So $500 billion plus. It's not really enough. And consumer spending and consumer confidence, as we saw, drop. There's a good reason for that. Virus is hitting. People don't have money in their pockets. I think the economic outlook going forward is very good, but there is this interregnum, this period of time where the economy needs more help, and it's not getting it, and it's not going to get it for a while, and it won't be what we need.
Shepard Smith here. Thanks for watching CNBC on YouTube.